Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts. And so this is pre-market prep for Thursday, March 6th, as I record this before the market opens. And so I'm going to take you through the normal tickers. And then I also wanted to try to get to AMD as well as NVIDIA before, I do close this. So make sure you stick around for those. But yeah, first going to start with the UVIX, which is ticker symbol UVIX. This is the 2x long VIX futures ETF, which closed yesterday at a price of $35.09, being down a little over 9% yesterday, but bouncing actually, quite a bit in the pre-market, over 13%. Wow, was not expecting this. It's at 39.79 currently, so just below this blue line here. We'll dive into the 10-minute chart in just a minute. But yeah, with this, what I wanted to say, which I may very well be proven wrong about this, is that, I thought that we were putting in the top here on the 4th. So that would have been Tuesday, having hit a high of 44.36 at the top of this green box here. And so the reason why I think that, we could be putting in a top there is because of, the candle formation. We do see a red candle from the day on Tuesday, the 4th, putting in a big wick to the upside as well as the downside. That does suggest some indecision, but we did close in the lower half of that trading. And then also, if we look at the high from March 3rd, that was at a price of 38.63. We actually closed just above that. Let's see, 38. 63 was the high on the 3rd, and then the close on the 4th was 38.64. So I was expecting that to be a little bit below. It does look like it's just about at that level, but it turns out we actually closed a penny above that high as long as I am reading these numbers correctly. But then yesterday on Wednesday, we did pull back some more. So yeah, it just seems like there's a good amount of weakness here, that there is a top being put in. Although if we do look at that high from Tuesday the 4th, we do see that the volume was increasing there. So maybe that is suggesting that we will continue up, maybe getting to that 200-day moving average there around 47.20, because, we are seeing this big spike in the pre-market. But, before I get into the 10-minute time frame, did want to just point out the 50-day moving average is at right around 31.50. Do have this orange line marked here at 30, along with the salmon-colored 21-day moving average, which looks like it's also right around 30. So I do think that we could be pulling back to those levels before finding support, maybe fading lower to around 27. But I do think that we could be going a lot higher. As I did mention, it is up a lot in the pre-market. So yeah, here we can see that it looks like yesterday we closed right around $35 a share. It was kind of flat in the after hours, but then, we got this massive gap up with the moves here hitting a high during pre-market of $40.32. But it is the pre-market, so what we might be seeing when the market opens is a gap up followed by a pullback. And we have definitely seen that in the past, most notably when we did gap up on August 5th, opened up pretty high over here, closed lower, but then also had this pretty big wick to the downside and then faded following that. So, we're not up as high as we were back then, but we could be seeing a similar type of scenario where we gap up and then close lower and start to fade. So do keep that in mind. Good to be cautious with this one, especially as we are around these levels that I view as could be around a top, but you never know. If we do look over at the VIX, this is the market volatility index. It did close yesterday above $20 a share, a pretty important level for us to be keeping an eye on. Closed at $21.93, being down 6.72% on the day. No after hours or pre-market trading for this one, but yeah, how I have it doodled here in the white line, could be doing a little bit of a consolidation like that before it either breaks to the upside or downside. Lots of volatility in the market, so tough to say. But, I would definitely be looking for a close below 20 to suggest that this is going to be cooling off. Or if we continue to hold above 20 with those closes above that key level, I think that we could potentially be seeing some more upside. But like what we're seeing with the UVIX in the pre-market, I think we'll have to wait to see when the market opens, if that's a gap up and continuation higher or a gap up and a bleed lower. We do have, as I've mentioned in I believe all of the videos on the VIX, is that we do have this uptrending light blue line there that was acting as support here. And it does seem like it might be acting as support again. But then the next level down that I have marked trend lines would be this yellow trend line acted as resistance here, maybe flipping over to support here, also coinciding with those moving averages, all right around the same price, ranging from about a high of 1730 with the 50-day moving, with the, 1779 with the 21-day moving average, and then the lower range is 1661 with that 200-day moving average in light blue there. So do keep an eye on those levels right around $17. Maybe we could be heading there, if not by the end of this week, maybe next week. But of course, we could be gapping higher and getting beyond, let's see, 2832 was the high from December 18th. I might actually mark that with a horizontal line. We will have to see if we can get up to that level. But then anyways, moving on to the SPY. This is the S&P 500 tracking ETF, which closed yesterday at a price of $583.06, being up a little over 1% on the day, but it looks like in the pre-market it's pulling back about $6.70, a little more than it went up yesterday, pulling back more than 1% to the downside. And so, yeah, looking at this, what we can see is that it did look like we might have been holding this yellow downtrend as support, coinciding with the 786 here, but we did get a full retrace coming down below $575 a share, currently trading above that in the pre-market. We did get some wicks to the downside, potentially testing that 200-day moving average around $569 a share. And with this, we can see that as this has pulled back, volume has increased some. So that does suggest that potentially buyers are stepping in as this does start to cool off, especially, like I said, with that 200-day moving average below us. But we'll have to see, do we kind of consolidate here, maybe form a bear flag and actually break to the downside, or do we start to move higher? I personally have a bias in thinking that the S&P 500 will be making new all-time highs in the coming months, if not coming weeks. I suspect coming months might take more than a couple weeks. But yeah, that would be, looking like something like I have doodled here. But to the upside, it does look like we have this orange downtrend based on the highs from here. Getting some wicks above it was definitely acting as resistance before we got a fake outbreak up here to form this new all-time high, hitting this red uptrend as resistance. And just like we hit that red uptrend, got rejected, I do think that we could be doing something similar with this orange downtrend, and that could also be coinciding with, let's see, these two moving averages that we have here. In salmon, it's around $600 a share. That is the 21-day moving average, and just below it in yellow is the 50-day, right around 597. If we do flip over to the 10-minute time frame, we can see the dip low yesterday to, $573.08, bouncing right around noon or so, actually close to 1 in the afternoon Eastern, bouncing up to these highs of $584.88 before cooling off, flattening out in the after hours, but then, as we can see here, gapping down in the pre-market. I am not sure what that news is. US dollar weakness. So I would actually think that would kind of spark the S&P 500 to go higher, but maybe I misunderstand that. But yeah, anyways, let's flip over just real quick to the SPX. This is the S&P 500 index, closed yesterday at $5,842.63, being up over 1%, just like the SPY. This does not have pre-market or after-hours trading, and also it does not have volume. Might just be the way that Webull sets this up, but can't see that here. Does look like the 200-day moving average is potentially acting as support there, but just like we're seeing with the SPY in the pre-market, I think that with the SPX, I think that we will be seeing a gap down into open, but we might be seeing a bounce, maybe being caught by that 200-day moving average. And if I do look really quick at the SPY, we can see that pre-market is at 576 and that 200-day moving average is around 569. So we are still above that level. And so I suspect that we might be opening lower in both of these indexes, but I think that we could be still opening above that 200-day moving average in both of them. So do keep an eye on that. And then looking over here at Bitcoin, we can see that this has just been jerking us around all week, been kind of frustrating, but we are now above $90,000. Looks like currently trading above 91,000, but did get rejected, it looks like, from right around at 92,000, right around that purple line that I have marked there that had acted as support in the past. A very nice dip buying level for trading in this range here, but that does now look like it is acting as resistance. And from what I have seen from other accounts talking about this, we really need to be getting above the high from, I believe it was from March 2nd. The closes for these candles in Webull are a little bit off. I believe they're in the Eastern time zone. They should be GMT. And so the high from March 2nd was around $95,000. Lots of people talking about that. So I'm just going to put that level there. Let's see the high for that day, 95, 114.75. So it does look like that is marked correctly. I'm just going to make that yellow. It's kind of a caution zone. We need to be seeing some closes above that level to reclaim that. Also, very interestingly, does seem to correspond with this red line, the higher lows that we were forming over here. And so confluence of levels there, it's going to be very notable resistance. And if we can close above that, looking really good, especially with the crypto conference or the crypto is it Town Hall? I forget what it is, the Crypto Summit tomorrow, Friday the 7th. So there's probably going to be some big news around that. Could be a sell the news event, though, so do be cautious of that. But could also be, rip the face off rally starting, maybe getting up to 100,000, 103 or so, maybe getting back to those new all-time highs, forming some above 110,000. But yeah, I do think that $95,000 going to be some pretty key resistance. And if we can't make it above that, do look for this yellow downtrend to be acting as support, perhaps pulling back to around 86,000. That to me has been a pretty important level. It does look like I have an alert set there. Personally, I don't have any additional buy set to that level. Just do the normal $5 DCA, so nothing daily DCA, so nothing too exciting there. But coming down to 75. I think that, we could be dipping down to around 74. So I think a 75,000 fill could be happening, maybe 72. And, I was thinking about, I got this alert here at 69,000. I don't have a buy place there, but I think that if 75 and 72 orders are filled, just $10 dip buying at those levels, I do think that regardless of hitting 69, regardless of this alert going off, I would then just move some additional funds into my crypto Bitcoin account to buy the dip here, whether it's at 72 or 69, doesn't really matter to me. I just think that getting into this shaded box would just be a really nice dip buying opportunity. There will probably be a lot of fear at that time, so that would be tough to do. But if 72 order does get filled, I would be looking to buy the dip here, but I'm not expecting it, and or I'm not counting on it. I would be definitely prepared and happy for further upside, so we will have to see what happens with that. But anyways, before time gets away from me, I do need to flip over to ticker symbol URA, which is the Global X Uranium ETF. Closed yesterday at a price of $24.67, being up about 2.5% on the day. And that is right around my level of $24.50 that I've been talking about us coming down to really since the end of January. I was talking about that. So we will have to see if we do start to do this little doodle that I've drawn there, kind of stair-stepping our way back up, or if this does fade lower, I think that we have gotten to, this pretty key level, this green uptrend. I had initially drawn it as this white uptrend based on the close from September 6th, along with the low from August 5th when markets gapped down. But I adjusted that trend line to be this green one, hitting the low from September 6th, and that does seem to correspond very nicely with the low that we hit on March 4th. So maybe that is the bottom. Maybe this starts to rally higher, which, if to fill this gap from current price, could be bringing us up about 25% from that low. That would be over 30%. So that would be a very nice swing. Currently doesn't look like it's open in the pre-market. So what I'm going to do very quick, I just got about 5 minutes. I'm going to try to flip over to AMD. And so what we can see with this, I have not done any new drawings on this. These are all, legacy drawings. And so what we see here is this downtrending channel that we have traded in. I should note that AMD is Advanced Micro Devices, which closed yesterday at a price of $101.67, being up about 1%, but pulling back in the pre-market about 1.5%, currently trading around $100 a share. And so, like I was saying, this downtrending channel we have been in going back to October, really like the first half of October. And you might notice that I do have this purple uptrend marked here. That is the neckline of this Head and Shoulders that I have doodled out. And if we draw, I'm just going to adjust this so I can draw what might suggest price coming down to around $2.95. I'm just kidding, though. I don't actually think it's going that low. But I'll actually come back to that Fibonacci extension in a second. But what we can do, actually, maybe this will be a little bit suspenseful. What I will do is I'm going to adjust this, just make that line a little bit thicker. We can see the 1618 Fibonacci extension down to there. I don't think we're going that low, but what we could be doing, I'm just going to hide it so it doesn't spoil for us. The 100% is right around, I guess it was there. It was just a little too thin for me to see the 100% extension, and so that's just going to be the basically move from the top there to the bottom here. I translate that over to the high there, and that brings us down to that 100% Fibonacci extension. And that also does correspond with a lot of gaps that I have marked over here. As we can see, it looks like on January the 6th of 2023, we closed at a price of $63.96. So I got that marked there. We have a gap down there to fill over here. On January 20th of 2023, we closed at $70.07, got a gap there to fill. And then again here, it looks like it was on earnings day, January 31st of 2023, we closed at a price of $75.15, another gap there that has not been filled. So 3 gaps to the downside that do correspond with this 100% Fibonacci extension that I just went over, and we can see that line right there very, very clearly in white. And another thing that we can do, this is actually what I wanted to do when I adjusted that axis, is we can take a measurement from the top of that head to the neckline, just going straight down there. And, the midpoint of that measurement is basically the first part of that measurement. The second portion would be the measured move down to where this could be heading. And that looks like it would actually be negative. So I don't think that's going to happen. So I would not be worried about price going negative. But generally, I just think that this looks a little bit bearish. So good to be cautious of that. But, just because we could be heading lower, let's see all of these levels. I don't even know that I mentioned it. The 100% Fibonacci extension is at 68.13. It might be approximate. I'm not sure I got the exact highs and lows here marked perfectly, but around 69,000 I'm thinking about Bitcoin. Around $69 a share, just having fun with it. But let's see, those gaps look like 75 down to around 64. So I think price could be coming down to those levels. And I would think that, I like to think about gaps as being kind of a psychological tease. that, people see, oh, these three gaps down here. I'm going to wait to buy until it gets down to 64. That final gap is filled, and then I'll load the boat. And so what might happen is the first gap gets filled, maybe the second, but not the third. And so that gets people waiting for that gap to be filled, and then a bounce is going on, and they get left behind. They realize they're left behind until too late. They then FOMO in. And so that is, I think, kind of a way to play retail there. And so I would look for, a downside move maybe to around 75. So that's about a 25% downside move from current price. But what we could be seeing in the meantime is potentially, or maybe after we get to that level, and actually maybe I should look at what is that uptrend based on. That does look like it's some pretty historical support. Does look like there's a pivot point from the lows of October of 2022, as well as, let's see, the lows from April of 2018. Also did get a bounce here from the lows of December 2018. So yeah, that does look like it's some pretty notable support. And so what I could see is if we do go lower, maybe fading down here to that level, getting down to around 85 where I've got that alert over there, and then bounce up to here, maybe get rejected from that neckline before pulling back, something like that. Or maybe if we don't get down to around 85 where that alert is, maybe we actually just bounce from where we're at up to here to that neckline and then pull back, making our way down to that trend line. So those are kind of two scenarios, I guess. This one here is going to be the more bearish scenario, whereas this one over here would be the more bullish scenario, with the bottom being in right now. So what I could see from current price is a potential upside move of about 50% to get to that neckline, or the risk of a downside move of about 20%. So it's kind of a nice risk to reward. And so, I wanted to get to NVIDIA at the end of this. I've got a lot of stuff doodled up here. I'll have to get to that tomorrow or maybe this evening. I got to get headed to work, so sorry I couldn't get to it, but do look forward to a video on NVIDIA, or at least it being featured in tomorrow's pre-market prep, which will be live. I will not be going to work, so I should have some more time to dive into it, and so I might actually do that tomorrow morning, so stay tuned for that. But anyways, as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot for watching. Have a great day trading. Take care, you guys.